I'm recording now. Great. Okay. So, like I just said, this is our agenda. We're going to go through all of these steps in here. Okay. Um, but first, I like to tell people a little bit more about myself so that you have an understanding of my perspective, how I'm coming to things, and how I look at things. This is something that I learned a long time ago is no matter who's telling you what to do or how to do stuff, you also want to know what their background is and what their approach is, maybe what influences them, um, because sometimes what they're saying could be skewed because of that perspective that they're having, and where they're coming from. So I think it's always important to know where your teacher is coming from and what you're getting out of it, because if you go to some of the conferences out there and trainings, it ends up being like a company is sponsoring the presentation, and then you start to realize that things are starting to be skewed that way. And, so here's a little bit more about me. Okay. I am a CPA. I have my own virtual bookkeeping practice. I have been in practice for 10 years now. And I started out and working for a public accounting firm. I did forensic accounting where it's really analyzing the businesses, um, figuring out. So, the best example that I have is if a hotel closes down because of a hurricane for a certain period of time, there's this insurance called business interruption. And my job was to come in and calculate what your profit should have been during that time you were shut down due to a hurricane, like all the damages and fixing all that stuff. I'm just projecting out what your profit would have been. And that's what insurance would reimburse you for. So I did a lot of, okay, here's the historical, here's how the business operated, and here's what it should have happened had that hurricane not hit you. So I did that kind of work. Then I went into the audit department where that was more what we would do, especially as a staff member, is you have a number on the balance sheet or even on the P&L, and we have to test that number to see if the transactions that make up that number are accurate. So there's a lot of understanding the workflow of the accounting workflow, how things operate, and make sure that the calculations and everything's done properly on all those transactions that we're testing. So, right, there's okay, did it work right? What, did it that process, did it fall apart and that sort of thing, right? And then I went into corporate accounting where my goal was to really present financials to non-numbers people. So simplify everything down, so that they can understand what's going on, or the executives. So they are actually, the work that they're doing is actually responsible, creating the numbers themselves, right? They're doing the operations and creating it. But it was my job to kind of translate, okay, here are the results and how that relates to what you're doing. And, how can we make changes and that sort of stuff. So really helping them understand that. I got pregnant with my first daughter, Izzy, and I wasn't able to continue working, or I wasn't able to set up a virtual working engagement with that company I was working for. So I decided, hey, I'm going to start my own practice. I had always been interested in that virtual controller, virtual CFO kind of business. So I took that as the opportunity to do it. Right after having a baby. So let's just start a company at the same time. And I was home full time with her for the first 10 months before I could afford to put her in daycare like twice a week. So it was a long time before she was in full time. Okay. It's a long process. But because I couldn't network, in the traditional manner, I was on social media, definitely on Twitter. Twitter was very active in the Atlanta area, so I was able to make connections and stuff, and I got my clients through there. I also was, got certified in QuickBooks early on because I felt like, hey, this is, the software that everyone's using. It's a good place to start, just to know that, understand the software and everything, get certified there. It was desktop certified. It was before QBO even had a certification. And then, but my first client really pushed me towards QBO, and I fell in love with it completely. And so I quickly became 100% QBO firm. Before it was cool, the old version, the ugly version, I was in love with it. I have been in love with it from the beginning, from first working with it. I think it's great. And I've kept up to date with all the changes, how things operate, knowing what all's happening and everything behind the scenes. Um, and, with that, that's because I was so involved and interested in the software. I've started the Twitter chat that we have every Thursday for QBO users, which ends up being mostly accountants and bookkeepers, right? And we have some app people in there too. But talking about QuickBooks Online, or talking about things that we do in a bookkeeping practice, and having a conversation every week. I've been doing that for 6 years now. Okay. Every Thursday. So what was happening in my practice was, I'm trying to do bookkeeping services, right? Um, Can't wait to get started, please. Just want to make sure. Okay. Just want to make sure Sally can see everything. Right? We're all good, I hope. Okay. Um, but what was happening was, I was offering bookkeeping services and doing that, trying to get clients, but I was also like, QBO chat was just growing, and people were there was a community growing there and everything. So my business myself was kind of like going two different ways. Um, so what I did a year ago was, okay, I really enjoy QBO chat and everything I'm doing over here in the accountant bookkeeper community. So let me focus on that channel more, and I can provide training and more resources. Um, so Sally, you are concerned my time is going to run out. Trust me, I've done these sessions a few times. It takes a little bit of time for the first one. We're going to get through. We'll be fine. Um, so, so yeah, now I'm doing QBO chat, the trainings and everything like that. And if you're not part of Build Your Best QBO Practice Facebook group, definitely request to join there. It's a free group of, I think we're over 2,000 members now, just helping each other out, growing your practice the way you want it to be. Okay. So you're here, right? That's my perspective. That's where I'm coming from. So I've been analyzing numbers. I've been doing all of this stuff. I've been looking at crazy, funky financials for years. And I'm like the cleanup person. I was always attracted to the messy clients, right? And getting them started. But here's the problem. Um, if you don't have a systemized approach to this, cleanup engagements can be, the least profitable engagements that you have. So the point here is, let's manage this so that it is still a profitable service that you provide. You're able to get through it, and it leads into other services that you can provide your clients, right? But it's usually, this is like the hurdle that you got to get past. Kind of, some people associate it with the onboarding process, because you have to get to a clean point to be able to start working. So that's what we're going to do. We're going to go through, here's what the engagement looks like. So the first step, diagnosing the books. Usually when I have my first conversation with a client, I will, tell me about your pain points, tell me about your business, what's going wrong, all of that, right? And then I say, I need access to your QuickBooks Online file so that I can, um, figure out what's not working and stuff, and I can give you a quote on how to work things out, right? Um, and this is where it comes into the diagnosing the books. I put the file that I have a free file that I send out that people can download off of the website for diagnosing the books. But I put that in the Facebook group, so you don't have to go through that process, and it's in there for you. It's a 4-page, I think, gives you kind of instructions on how to go through the whole thing, but we're doing it here too. But it also has a checklist in there, so kind of awesome. So when I go through and I diagnose the books, I am marrying up what the client has said their issues are with what's actually going on in QBO, because what they are talking about doesn't always work with what is actually happening in the numbers, and they don't understand how that operates. That's why they've come to you, right? To help fix things. So you really want to get that, again, perspective of how are they doing things, and then you can kind of realize how my client is screwing this stuff up and making a mess, and how am I going to unravel this whole thing. So when we diagnose the books, we are going to review everything in the financials. You either run the trial balance and go through everything, or the balance sheet and the P&L. Okay. But you're just looking, you're just observing, you're not doing anything to those transactions. I've fallen down that trap a few times, right? This is just looking, and this diagnosis shouldn't necessarily take more than 30 minutes, maybe an hour of just looking at stuff. Because what you're going to do is here's an example, right? We're going to have a trial balance. I just exported this trial balance down here, right? And what you do is you note and you figure out what's going on with, excuse me, with the accounts, every single thing. So in this example, let me move it, make it a little bit bigger for you. So this checking account was last reconciled. And so this example is July of last year, okay? This is last reconciled January 31st. I'm looking at what has the reconciliation reports, see if there's a whole bunch of unreconciled items or something, stuff that I need to worry about, okay? So you just want to make these notes all the way down, looking at every transaction and saying, okay, what is this? Maybe I'm going to have to ask the client about it, this sort of stuff. Credit card accounts, some people don't reconcile credit card accounts ever. So, okay, I'm going to have to deal with that, right? Looking at the detail of the P&L transactions. Okay, those get to go a little faster than the balance sheet stuff. The balance sheet's a little bit more in depth that we kind of look at. So, but you can see this. I've gone down and I've written notes on everything. And this is just really like the core of diagnosing what's happening. You'll see in my PDF and in here, I have I and C. It's investigate and clean up further. Okay, you want to note all of that stuff, and that's how I'm having it, listing it in there. So we note all of that on the spreadsheet. And we want to make special attention to hotspots. Okay, and I will give you examples to hotspots a little bit later in the presentation for today. Okay. Then we take that information to come up with our pricing and our checklist. So going back to this spreadsheet, what I look at is, okay, I see this account has not been reconciled since January, and I got to go through July. Okay, so what I do now is off to the side somewhere, I say, okay, I have to do 6 months of reconciliations. How long is that going to take me? Right? Maybe it takes me 30 minutes. So maybe 30 minutes, right? No bank recs. Maybe that's 2 hours. So 2 times 60. Since I've started this in minutes, I don't know why I did that. But then you kind of come down and now you've given yourself a time frame, an estimate as to how long this is really going to take you to clean this stuff up, and you've done it by account pretty much, because that's how you're going to work through things, right? Um, so you come down to the bottom, you figure out how long you think it's going to take you, then you multiply it by your hourly rate. Sometimes if you are an underpricer, like I have always been, where I underestimate how long it's going to take and always shortchange myself, add 25% to the number that you come up with, okay? Um, Realize if you're that person, then just do that and add that, add a little markup for you or something so you have a little bit more room. Then come up with whatever dollar amount. Obviously, I'm not going to tell you how to price here. There's options where you can do hourly pricing, you can do flat fee pricing, you can do value pricing. Those are like the big things that are going on. This is just how I do it. Okay, I end up with a flat fee, I tell the client, and we move on from there, right? Now, what we want to make sure is that we're on the same page with the client. They have to have some understanding of how messed up their books are. You don't necessarily have to go into all the detail of your spreadsheet and everything, but they need to understand what your starting point is and where they're going to go, um, so that they can also like match up the value that you're providing them with this cleanup. And like, hey, look, I got 10 months of accounting that I have to like pretty much redo. It, it's not going to be cheap, right? Um, if that's just the expectation. You got to know that I need to go back and do all of this. And when you're able to communicate that, they will have a little bit better understanding of, why you're pricing it at whatever you're pricing it at. Okay. Now, so going through the steps a little bit more of diagnosing the books. The first thing I like to do is compare the prior year numbers to the tax return. Okay. So, in the last tax return that's filed, if you can get that, that's great. If you can't, it's okay. It's just a matter of what you can actually get when you're reviewing this stuff. So when we want to compare it, we want to see how far off they are, pretty much. Did they make changes to historical numbers, or it's just off? The thing that I say is you sign your tax return, you send it in, you say it's accurate. So I want my numbers to match the tax return. Your tax preparer also does, unless we're in a situation where we're going to amend tax returns because they're completely off and we're working under that kind of engagement. We want our numbers to match tax returns. So we're going to have to clean up anything that isn't working, it isn't matching. Then again, we go through, export this year's trial balance. Then what we do is go into those bank reconciliations and see if they're all done. When's the last bank rec done? And it's also important to look at the bank reconciliation and see what hasn't been reconciled. That's a big one, and I think I have that in my hotspots, because a lot of people like to do reconciliations and just leave the transactions that aren't checked off in there for, maybe a year. And you got to do something with those transactions. So that would then be extra work you have to do. Maybe it's so much that you have to undo bank recs and have to go back several months. So that's something you want to look at when you're looking at those bank reconciliations. We want to see undeposited funds. Do we have a lot of money that's been sitting in undeposited funds for 3 years? Might be an issue, right? I like to review the AR aging and the AP aging just to see if things look right. I might also confirm with the client, do these look right, or are we completely off? Are we going to have to work on these accounts too? Run the inventory valuation report so that it gives you more detail to look at. And if there is any kind of inventory count that they have that they've made at some point, try to match it up to that to see how far off you are on things. Um, and maybe, and yeah, see if the valuations for those inventory items just appear to be appropriate. Okay. Um, we want it, basically, we're trying to see like, oh, you know, there's routine work and there's like, oh shit, we got to fix this stuff. So, and you're trying to determine the difference between how much time you're spending on those sorts of things. Like I could do bank recs any day if the bank feed's working and stuff like that. That'll take 2 seconds to do bank recs, right? The question is, if it's all messed up, then I need to do more time, spend more time on it. I like to get the detail of the fixed asset accounts just to see what all's in there. Um, Review all other asset and liability accounts and the equity accounts. So what you will see in this process is if you lock down everything on the balance sheet and you know that's right, then looking at the P&L is fairly easy. You're just trying to make sure that the revenue and the expense accounts are in the right area. But we got to work on the balance sheet first, lock it down, make sure that's right before we can get over to the P&L. And then again, those are the steps. Once we review the revenue and the expenses, then we're going to go through our notes to see how long things take. And if there's anything that is a really big issue and you have no clue what to do with it, it's one of those like, it's raveled in with 5 other accounts or something like that, and you're not sure how to price it, deal with it, how long is this thing going to take, you might want to note that that area is outside of the scope because you're not even sure of how messy it is until you handle everything else on there. So if that's the case, say this is outside of scope. Once I am done these other things, then I can give you a better idea of how long it will take me to clean up this area. Sometimes if you clean up the rest of the books, it unravels and fixes that really scary area, and then you don't have to worry about it. So you just never know, and it's okay to say that it's like, hey, this is really screwed up. I need to do all this stuff first before I can even tell you what's going on here. Okay, so going back, let's look at hotspots, which I kind of pointed out, but we'll go into a little bit more. Prior year balances, if they don't match the tax return, that's an issue, right? Again, if it's signed by the client and filed, it really needs to match, okay? Unreconciled bank and credit card accounts. Like I said, there's so many people that don't reconcile their credit card accounts. It drives me batty when I first look at a client and it's not done. I don't think they realize that they can do it or something. Maybe you're just used to hearing bank reconciliations and don't realize that you can do credit card reconciliations. So maybe that's why, but that's one thing that we got to do. Again, if you have a lot of unreconciled transactions in the bank and credit card accounts, that is going to be an issue because you're going to have to go through all those transactions and figure out, should they still be in the books? Why aren't they reconciled? What do I do with these transactions and that sort of stuff? Now, through this course, you will get the tools to help you understand and deal with those, okay? Again, remember, everything I'm doing is to help you efficiently get through this, get through the cleanup so we can get to the other side. And you don't have to get in that whole time suck and lose profit off of this. Okay, if your bank accounts aren't connected to QBO, then the question is, okay, I need to get that connection set up. How many transactions are not in QBO am I going to have to deal with? Might have to go into the bank and download a .qbo file to get it in there. all of that sort of stuff, like that could be a wrinkle and figure it out. What do we have to deal with? Or even on the easier point, maybe they have like 900 transactions that are sitting in the bank feed area and have not been processed yet. That's something that's going to take you time to get there, right? Undeposited funds, that is always the big one. Revenue gets screwed up in a whole bunch of different areas. So it's, the revenue account, um, undeposited funds, and accounts receivable. Those are the biggest ones where it can be wrong in one area and it screws up the accounts for all of them, or wrong in two areas. And yeah, so we kind of unravel all of that. But again, if there's a lot of amounts that are sitting in undeposited funds for a while, it's something you're going to have to work on. When I look at the AR and the AP aging report, look for negative amounts on there, and anything that is past due, 90 days past due, that is definitely, those are big hotspots that it's like, okay, I'm going to note that. I'm going to have to deal with 10 clients that have negative amounts, right? And maybe look at that detail and see, maybe that's 20 invoices or payments that aren't matched up to something. So you can get an idea of like, okay, that's going to take me how long for those. Again, estimating what your time is going to be on this. If your inventory amounts don't match the manual inventory, you're like really far off. Yeah, that's going to take some time to clean up, right? There are negative amounts on the AP aging, same thing with the AR aging. Transactions in the fixed asset account that's under the capitalization policy. Sometimes if you look at the detail of the fixed asset account, you have a whole bunch of like $25, $50 things. Just know like, okay, I'm going to have to fix those, move those over into the right place. And how much are you going to have to deal with on the fixed asset side? Stale or old balances on the balance sheet. The reason I say we're going to lock down the balance sheet is because most people don't look at the balance sheet. This is the place where everything hides, right? And clients don't care about the balance sheet. They don't look at it over there. They care about the P&L, right? How is my business operating? Not the balances on the balance sheet. So there's a lot of the time where balances sit over there and like a transaction actually accidentally hit a balance sheet account and it's been sitting there for years. Okay. So if that's been sitting there and there's no activity, we're going to have to deal with how to clean that up and how to get that account accurate. So those are things. No support. If you're doing prepaids, accruals, deferrals, all of those scary accounting terms, there needs to be some sort of supporting spreadsheet or something to get you that calculation. Otherwise, it'll take some time to unravel, right? Payroll liabilities. If you look in the detail of the payroll liabilities, same thing with the sales tax stuff. If the balance is always increasing, that's an issue because it needs to like, I owe, I paid. Like it needs to go back down, that balance. But if it's like I owe someone and it never gets paid, obviously you're gonna have to unravel that and figure out what's going on there. Okay. Loans that don't match an amortization schedule or loan statements, those sorts of things, again, stuff we're gonna have to clean up. Balance in the opening balance equity account. That's something, theoretically, that account should be zero. So you have to figure out what happens to those transactions. Okay. Business related expenses that end up going into the equity accounts, or later on, non-business transactions in the P&L, right? We want to make sure that all of that stuff is separated properly. Then when we get into revenue, if you're using invoices or sales receipts, then you probably shouldn't see deposits in the revenue accounts. Okay, that means there's a breakdown in that workflow and stuff we're going to have to deal with. Now, I know we're looking at it, and I've gone through a lot of this stuff. I want to take a second. I've gone through a lot of stuff so far, right? And please don't freak out on me. We have a month, we have 6 sessions. I am diving into every single part of this. This is your high level overview of things. So don't freak out. I am going to repeat, 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 dive in and cover all of this stuff. Okay. So I just want you to be aware of all these things we're dealing with. Okay. Coming back, when we look at the revenue expenses, are there negative amounts sitting in there? Could be that, you know, a revenue transaction got booked to an expense account and I'm going to need to fix that, right? And it also comes back to when you had talked to the client and heard what their workflow is and be like, oh, so and so is doing the books and this is kind of their mistake. This is their thing that they tend to do. It'll be something you look out for going forward. Inconsistent coding of transactions, that's where I can get like OCD on. I just like the coding of transactions to be very consistent because it helps with reporting and understanding how the business operated to help project out what's going to happen in the future. If your coding of transactions is all over the place, you can't rely on those numbers on the P&L to come up with, make business decisions going forward. Anything that's sitting in the reconciliation adjustments account or ask CPA or uncategorized expenses, we're going to move all of those into the right accounts, okay, and deal with those. So let me take a second and look at any of these questions that I have. Okay. Estimating time for inventory cleanup, or do you have a better solution here? I'm sure I'm jumping the gun, so ignore if you're still getting to this. We did cover inventory a little bit, and I will also cover that later on in upcoming sessions. We'll dive into it a little bit more, okay? One of my recent cleanups, the tax return was done on a modified accrual basis. This is new to me. It's been a while since I've heard modified accrual basis. I think that it almost means like we're going to do accrual where it feels right. Like that's how we're going to do it. So it's kind of a mix between cash and accrual on things. So yeah, it'll be a question probably with the tax preparer of, okay, what is not accrual based in these books? Like what's the difference here and how are you coming up with numbers? Like, and that's important if you're comparing to a tax return. If the books are set up and you're looking at it cash basis, but they filed an accrual basis return, then the numbers aren't going to match. So you do need to make sure you're looking at like the same view of things. And so it'd probably be, if that were the case, I would have a conversation with the tax preparer and see like, what does that mean in your world? you know, um, I am one of the first ones to admit, and I tell people I'm a CPA, but I haven't done tax stuff in probably close to 20 years, or let's just say 15. Okay. I haven't done tax stuff in that long. I haven't kept up with tax stuff. My tax books are like ancient. Okay. You're the tax preparer. You know what you're doing. Tell me what this is and why. Yeah. I can translate it to what I care about on the bookkeeping side. So, yeah, I definitely be like, look, I don't know what's going on with the tax side of this or what you're worried about here. Just let me know, and I can make sure the books are right for you. So, um, and they kind of appreciate that when you're upfront and like, I'm not going to play games with you. I'm not going to try to take your clients. Look, you're the tax expert. I'm like the bookkeeping management reporting expert. So we got to work together. I want to make your life easier to make that tax return. And really, if you charge a flat fee, you'll make more money off of it because I'm going to make the books like awesome. So it doesn't take you any time to do the tax return. So you kind of want that situation. I don't know. So going back, setting goals. When we look at a cleanup engagement, we want to make sure our goals are SMART. I don't know if you've heard that acronym before. So specific, measurable, assignable, realistic, and time measured. They specific, like obviously specific with all of these things. Like, what am I actually going to accomplish in this cleanup, right? So you want to say, like, here's how messed up the books are now. We have 6 months to do, plus maybe like fixing a couple more months on, on the back end of things or something like that. Here's my starting point, right? I am going to get to my end goal, and here's how I'm going to get there. And what timeline is it going to be? Assignable, who's going to be doing it? All of that stuff. Is it realistic that I can get it done in that time frame, right? All of that. How am I going to get to that finish line? So, and then we have even more options of, traditionally when you think of cleanup, it's like we're going to fix the transactions and we're going to get there, right? We're going to make it right. There are instances where that is not affordable for a client. And you'd be like, okay, well, maybe we could just make some summary journal entries to get, a couple of years fixed up, and then we do the detail for this year or something like that. Maybe you work through it so that it's an engagement that you can feel comfortable with and your client can feel comfortable with, right? Maybe they can't afford a whole bunch of stuff, and you're giving them realistic options. If they can't afford anything, the realistic option is going to be someone else to do it. So, but helping them in those kind of things, and you just want to be on the same page. Like, if my tax returns filed for, we're looking at this, so 2018. If my tax returns filed for 2018, and the books are messed up from 2017 or something, if we're not worried about going backwards and we're good with what the tax return was, I can make the numbers match your tax return the end of 2018, and we're going to flush it through into 2019. Okay, instead of going back and cleaning up everything. It's just a matter of what kind of detail do they want in there, what kind of stuff. You gotta step back from perfection and be like, okay, what is going to get the job done, and we'll be okay still, right? I don't want you to sacrifice quality, but sometimes I know that I go overboard on detail and precision and everything like that, where I might be spending a lot of time to save or to fix a dollar. Those sorts of things we want to stay away from. Okay. So creating the checklist. Right, we went through the trial balance, noted everything. Now, coming over here on the checklist, ta-da, we have a checklist. So basically, again, it's all the accounts that we're going to be dealing with, right? I've listed all these out here. We go through phases where first we do the bank reconciliations, then we're going to clean out these accounts, then we're going to go do revenue, then we're going to do AP, do the other balance sheet accounts, and then expenses stuff down here, right? So I lay all of that out. I say what task we're going to do. I will say completed date. So if I'm done with it, I will say, okay, I got through this today, and put in my initials and say it's done. If you are in a firm where you have staff and a reviewer, then I could come in and say, I reviewed this the next day and I have no idea what those initials are, but that person is done. So that's how I deal with this. So I can see, like, okay, this section hasn't been done yet. This one hasn't. Then we can put over here our notes. So reconciliations, I need to do January through July. This one, I need to do all of the reconciliations right there. And what, documents do we need so you can ask your client for it? All of that is we go through and create this checklist. Now, remember, this file is up in the Facebook group already. If you go into unit number 1, I have this saved in there, okay? So you can see the trial balance on 1 and then the checklist on 2, right there. Okay. So I gave you that flow right here, 1, 2, 3, and 4. Those are how we're going to go through it. And then the other thing is you may go down that rabbit hole and get lost. You need to be self-aware enough to know that, okay, I've been working on this for way too long. I need to walk away. Okay, like this area is not working. Maybe you're reconciling an account and you can't make that reconciliation work and you don't know why. Stop. Just stop and work on a different area, or stop and come back to it tomorrow. Because usually when we are stuck on something, we have to have that time away from it to come up with, like, it's usually a simple thing or you figure it out quickly, but don't waste all of your time trying to figure out the solution when you just need time away from it. Okay. Um, and again, you have to be self-aware of that. So it's one of those things. Managing your expectations, it is so important to have a clear understanding of your scope and what you're going to do. Have some sort of contract with the client. That would be great. Awesome. I have been in a cleanup engagement where I did have a contract, but they still kept on throwing new things at me. Like, oh, I thought we talked about that. No, no. And that's why I say it's like really, really important to have a clear definition of what we're doing. In that example, the client wanted me to import all of the time activity so that they could do reporting. And so yeah, there was all these extra things that might not deal with directly with the financials, but they wanted for reporting. So we're dealing with all of this other stuff, right? But you want to be on the same page. Otherwise, you're going to get in trouble, right? Or you'll find yourself in a mess, a situation you don't want to deal with. So estimate the amount of time it's going to take for you to complete the work. Then allocate that time into your current workload, because it might take you 40 hours to do this cleanup, but it's not going to take a week, okay? Because you have other things to do in that week. So say, okay, it's, this will get done over 3 weeks or something like that because of my workload. You want to include some sort of buffer. It's better to deliver early than it is late, right? But also, you want a buffer because clients might not get you stuff on time, and you might be, need stuff and get stuff from the client and it's just holding you up. You also, if they do that to you, you want to make it clear to them that, hey, if I don't get this document by Friday, it's going, based on my current workload, I'm gonna have to push the timeline another week to get to this stuff, just based on how my schedule is looking. You don't have to have a specific schedule, by the way. Just know that you need to communicate, like, hey, you delayed me, so I'm going to the time frame has now delayed. Okay. And then make sure you verify the account information with the client. ARAP, that is one of my other mistakes. I will give you all of my mistakes. Okay. I had a client where I looked at their AR and like all it was 90 plus days, right? And it was like a huge dollar amount, 90 plus days stuff. And I was like, this is totally inaccurate, wrong, right? And so I was fixing it, getting it all right, and come to find out, oh no, yeah, those clients, we keep those balances out there. They're just paying a little bit every month, or even though I never saw that. Yeah, they're just sitting out there. And so all that cleanup I did was really wrong. And so, yeah, then I wasted time on going back. So, yeah, it sucked. Then ending the engagement. What are you going to provide the client at the end of the day? It doesn't have to be a huge thing. I just want you to be aware of it and communicate that. Are you going to give them a financial report? Give them, like, hey, everything's done email, a final meeting. There's all those different options. That stuff is up to you. I want you to think about what is that final deliverable? What is done to you? Because that's always um, been an issue for me of like, I feel like it just keeps on trailing along and it never finishes. So we need done. We need that cutoff, right? And then what happens after that? Think about your business and what other services you can provide your client. Are you going to do training, ongoing bookkeeping? Are they just going to mess everything up and come back next year? What is the next step to this process? Okay, and keep that in mind because again, you are running a business here, and yeah, like we need to think of this of still this whole engagement needs to be profitable to you, needs to help your business grow or be healthy. That was the word I was going for, like a healthy business, profitable, right? And what other opportunities can I get after this, right? So that I can continue to have a business and keep on going. So those are all things we want to think about. Okay, if you have any other questions, put them in right now. Ashley says, please remind to invite me to the Facebook group. I feel like I sent you an email today. It probably came from QBO chat at iconisgroup.com, so check. If not, let me know. Great first session, so much awesome advice. I'm really excited to master this after struggling through 2 mini crazy cleanups and working on 3 right now. Oh my God, 3? Wow. And that's a thing. I know I was telling you guys, like, when you go down that rabbit hole and get stuck, the alternative in your mind is like, if I walk away from this, it's going to take me like 20 minutes to refigure where I was on things. So you want to find when you within that checklist, looking at the checklist and be like, okay, I'm going to accomplish this today, right? Or this in this segment of time. And I'm going to do this next. Okay, so, and that's why I have this checklist so you can kind of see where you left off and what you need to pick back up. There's nothing like, yeah, stopping in the middle and just being, yeah, having to refigure things out. So you want to balance the two, but really, seriously, wasting the time is so hard. Okay. So I know I have to learn to say no to people. I get you. I get you. Absolutely. I'm the pleaser and I, want to make everything easier, but you got to give yourself a boundary to be able to do that. So you can see when I'm doing these master courses, I give you everything and anything for that month, right? So I've created a boundary for myself because I know I'm just going to want to give during that time frame. But that's how I've set it up, right? And thank you. This is going to be great. Can't wait. Awesome. Great, guys. Okay, so I am going to end out this session. Again, this is new with GoToWebinar, so I'm going to see how long it takes to save the file, record it, but I'm going to get you that link to be able to access this video, this recording at any point in time. Okay, so we will do that. And that's it. Then I will see you guys at Friday, on Friday, same time. Okay. Remember, ask your questions in the Facebook group if you have any. Okay. Thanks, guys. See ya.